Crypto spring, macro, the final flush into the bottom of the economic cycle, but assets are already looking through it, and AI, the biggest technological breakthrough since the splitting of the atom.
As the East begins its trading week, Bitcoin and Ether were both recently down a few fractions of a percentage point. Bitcoin was off 0.34% to $28,787, while Ether fell 0.4% to $1,913. BitBull Capital CEO Joe DePasquale points to meme coins as a reason for a pump in market sentiment, but fairly flat activity for the crypto majors. The market hasn't moved strongly this week, but the market sentiment has been on a roller coaster with meme coin mania at peak, DePasquale wrote to CoinDesk in a note. With Pepe and other meme coins posting high five-figure percentage gains, we wouldn't be surprised if a market-wide rally materializes in the near term. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul updates about his outlook for blockchain technology in 2023. Raoul also breaks down the benefits of regulations in the space and how it will drive the future of institutional adoption in crypto.
So going back to 2008, the big thing that changed was we lost trust. We lost trust in the system. People lost trust in the American dream or the European dream. They lost trust in banks. They lost trust in intermediaries. They've lost trust in media. They've lost trust. Foreign governments have lost trust. So nobody has trust. So, well, crypto is a trust-based system, which is interesting. But what it means that, okay, if you don't trust anybody, you need something that helps you. That traditionally was played by gold. You know, I don't trust your money, you don't trust my money, I don't trust that you're going to do this, so I'm going to keep gold. But gold was also seizable. So crypto played a role in all of this, and it plays it at many levels. It's clearly not a system of money yet because it's too volatile. It's impossible to try and deal with daily transactions for bread in a Bitcoin price that goes up and down, up 700% and down 70%. That's the way to destroy an economy, volatile money. But in terms of long-term overall savings, because it offsets the debasement of currency, which is driven by the debt and the demographics and everything else, it works very well indeed, in fact, better than anything else. And because we've got this ongoing adoption of the technology. So when you go to, firstly, who is the biggest players in the world that are potentially moving into this market? And I think you and I have even talked about this in the past, it's the sovereign wealth funds. They have an infinite time horizon, and what they need is independence over all things. Now, most of them have an enormous amount of US treasuries, which they will do because they have dollar debts, dollar economy, everything else. So it's not like we're just going to sell our treasuries, but they need other things. Now, they've been buying gold at record pace, obviously, because if the US seizes or renders useless the Russian reserves in US treasuries, then why would anybody want to hold US treasuries over an extended period of time? You either have to be friends of the US or you risk it. So I see a role. And that's, I think, one of the reasons why the Middle East is becoming very active participants in the market overall. And I think for individuals, because of the lack of trust, it's one thing we can trust because it's not driven by a government. All the government's going to do is try and regulate it. They can't get rid of it. And it actually empowers people to think that you're fighting the government when it comes to regulation. I mean, just look at Twitter. People love an enemy, and Gary Gensler is like enemy number one because he represents the old system, the system that let us all down. And he's kind of saying, look, we're there to protect you. And everyone's going, you never protected us in the first place. We'd rather take our own risks with our own money, which is the agency thing that you talked about.
DePasquale notes that Bitcoin still hasn't tested support levels on the downside and that Bollinger Bands continue to tighten. This means that the gap between the upper and lower bands is narrowing, indicating a decrease in market volatility. This typically suggests that a significant price movement might be on the horizon, as periods of low volatility often precede larger market trends. Moving forward, we'd expect a strong bounce off $25K to continue another leg above $30K, DePasquale concluded.
So what we're doing is debasing currency. So I dug into that and thought, okay, if that's the basis of the problem we now face, then let's look at things in those terms. So I started dividing the S&P by the Fed balance sheet or the G4 central bank balance sheets and all assets. And what you got was kind of a normalized world where the S&P had gone nowhere, really. Gold had gone nowhere. Real estate had gone nowhere. But two assets had gone up a lot. And one was technology and the other was crypto. I was like, That's when I started to understand network effects and understand the secular trends that drive cryptocurrencies and many technologies. And that was the whole thesis I started building about Metcalfe's law and understanding that. Out of that whole moment as well, I started focusing on the technology side of the equation. I'm like, why? Because I'm a macro guy. We're generally technology cynics. Our job is like, nothing is new. We've seen this all before. It's all a bubble, right? That's the general macro thinking. And I could see clearly when I looked at the data long enough and divided by the balance sheet and looked at it in various ways that there was something actually much bigger going on. So then I started digging in and I came up with this thesis of the exponential age, which I'll come back to, which was I realized we're walking into a nexus of network adoption effects at scale of which humanity's never seen before of numerous technologies. And we'll talk about that.
The Bitcoin community is at a crossroads right now. On the one hand, some of the largest miners are either working through bankruptcy proceedings, getting bailouts, or restructuring debt. All of this a hangover from a brutal, bearish 2022. At the same time, many in the Bitcoin community are decrying the congested, expensive state of the Bitcoin network caused by the surge in the popularity of the NFT-like ordinal inscriptions. Binance's temporary pause of Bitcoin withdrawals on Sunday was proof that there's a problem brewing.
Okay, so that was that thesis. This is what gave me a lot of the strength to understand what to do in crypto. I realized that crypto was a secular trend driven by network adoption and a cyclical trend driven by liquidity, i.e. the balance sheets, M2, those kind of things. And that if you lean into those, you get the big opportunity. My way of doing that was not by trading in and out of crypto. It was just by adding when it all pukes and everything goes horribly wrong, and you're at the bottom of the long-term adoption trend channel, 2 standard deviations oversold. Okay, there's the perfect buy signal if you believe the network adoption continues. And that's worked for every technology stock from Amazon to Apple to Microsoft to everything. They all work the same way. It's like, and once you see this stuff, you can't unsee it. Secular trends, cyclical trends, the nexus, the magic nexus is really an amazing opportunity, which was last year in crypto and last year in exponential age technology and technology overall.
So, what are your thoughts about Raoul Pal's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.